The public service loan forgiveness program, it's a trap. Girl, I said it, it's a trap. On the surface, it sounds like a really good deal. I mean, who wouldn't want all of their student loan debt to be completely wiped out after 10 years? Especially if you have over $100,000 in student loan debt. This program, it's not your one way to get out of debt onto a path of financial freedom, because there's a catch, and it's a really big catch. The catch is the program slows you down on your financial independence journey. And in my opinion, it really keeps you poor. Because in order to qualify for the program, you've got to stick with a government or a nonprofit job for 10 years. And only after 10 years, the government may or may not forgive your loans. Let's dig deeper. Here's what's required of you to be qualified for this program. 1, you have to work full-time for a government or nonprofit organization. 2, your loans have to be federal direct loans. 3, you have to be enrolled in income-driven repayment plan. 4, you have to make 120 qualifying monthly payments. That's 10 years. Luckily, they don't have to be consecutive payments. The last thing is you have to regularly submit your employment certification form to ensure that your job qualifies every month. So great, sounds pretty simple, right? You work 10 years for a nonprofit hospital and your loans are forgiven. Ta-da, amazing. But wait, Sam, how does this program slow you down on your wealth building journey? Because being enrolled in this program can lower your lifetime earning potential. It delays your capacity to invest in assets. It makes you dependent on the government for financial support, and it keeps you stuck in a role with limited professional enhancement. Let me explain further. Let's start with the big one, lower potential earnings. In order for you to build wealth, you need to increase your income and decrease your expenses. With public service loan forgiveness, it's much harder for you to increase your income because jobs that qualify for this program, they're often in public sectors or they're with non-profits. These means that these roles typically pay much less than positions in a private sector, like a major hospital or a private practice. Typically, I would say about 10 to 30% less. You can certainly try to negotiate for a higher salary at these nonprofits, but many of the community centers or these big rural hospitals, they just don't have the budget to offer you higher salary, better PTO, or even a 401k with match. Most people who apply for these roles, they don't even attempt to negotiate their salary because they're counting the loan forgiveness money as additional income from their base salary. With this mindset and a smaller paycheck, growing your income becomes extremely challenging. This program delays your ability to buy assets. In order to build wealth quickly, you need to buy a lot of assets. Assets are things that put money into your pocket, like rental properties or a small business. But in order for you to buy assets, you need a loan from the bank. In order for you to get a loan from the bank, you need a low debt to income ratio. And you cannot have a low debt to income ratio if you're holding on to $150,000 in student loan debt. The longer you hold on to the debt, the harder it is for you to buy assets. Why wait 10 years after your loans are forgiven to be able to buy assets at a good price with low interest rate? Why delay that process for yourself? Now guys, if you're new to my channel, hi, I'm Sam Ming-O. I paid off $150,000 of student loan debt in 4 years on my single PA income. I didn't rely on public service loan forgiveness, and because of it, I built a $1 million net worth in my 30s. And if you disagree with my opinion about this program, please let me know in your comments. I would love to hear your story and your argument. Moving on. Uncertainty. This program has a ton of uncertainty because the program's future isn't guaranteed. If there's a change in politics, leadership, or funding, it can take the program away in a heartbeat. So completely rely on the government to erase your student loans, that's a risky move, leaving you completely dependent on the government. Now, here's a radical thought. The government isn't planning your path to $1 million status. In fact, they don't really care if you're a millionaire. They would rather have you work as a 9-to-5 employee, clocking in and out every single day for the rest of your life. It is no wonder financial literacy and entrepreneurship, it's not taught in school. Most of you guys end up on the University of YouTube for this type of education, financial education. Sorry, I completely digress. The thing is, there's no surefire promise that after 10 years, you're gonna be completely clear of debt. There's no guarantee. If there's a big political shift, this program can disappear overnight and suddenly you're left with a crap ton of student loan debt at a very, very high interest rate because you're on the income-driven repayment plan, which has a lower monthly payment but a much higher overall interest rate and fee down the road. Now let's talk opportunity costs. Committing 10 years to public service loan forgiveness can really limit your career growth. You might be stuck at a job that doesn't allow you to grow at all. Typically in private sectors, there's more money, more chances to acquire more skills, and more opportunities to move up the leadership ladder. Now, imagine this. You get a job offer of a lifetime to be a consultant at a new pharmaceutical company in Switzerland. Let's say because it's Switzerland, they offer you a salary that's twice as much as you're making right now. They're gonna give you all these great benefits, move you to a nice, beautiful home in Switzerland, and you love it. But you would have to pass on this offer because you're committed to public service loan forgiveness. Because this job in Switzerland wouldn't qualify for this program. Here's another thought. Let's say you're 7 years into your PA career. You have 2 kids and you suddenly want to step away from clinical medicine to spend more time with your kids. Let's say you want to work part-time or maybe start a new business or create some sort of digital product to sell online. Well, if you're in bed with public service loan forgiveness, you're not going to be able to fully commit to your kids or entrepreneurship because you have to work full-time with this program. And that's really difficult. You don't want to have to make this big major decision right now that's going to affect the next 10 years of your life, especially if there's going to be a lot of changes in your life with kids, with your husband, or maybe a sick parent. It's hard to gauge. And I think most people don't consider these things when they're committing to public service loan forgiveness. Honestly, if you read the fine print of the program, the rules of the program are really tricky. You have to fill out a bunch of paperwork, you have to make sure your job qualifies every single time, and you have to stay on top of all the new details for a whole decade, a whole 10 years. If you mess up just even a little bit, you can find that you're not eligible for loan forgiveness after all, after working 10 years in a low-paying job. 10 years. And then you still have to pay off those loans. Like, that's a bummer. I mean, I know the program has worked for some people, but it's not a guaranteed win. And that to me is very risky. You really have to think hard about whether this is a right move for you in the long run, in 10 years. I know a lot of you guys are doing the public loan forgiveness program, and you guys probably really like it. And most of you probably disagree with my opinions here. But either way, I firmly believe that if you're trying to fast track your way to building wealth, this is not the best program for you. I hope you the best of luck on your student loan repayment journey, and let me know in the comments how you're planning to tackle your debt. Don't forget to like and subscribe to the channel, and I will see you in the next video.